The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour. My pleasure to be here on this 1st of November, on this 3rd of November, first trading day of the weekend, first trading day of what? Of November. And lo and behold, the Dow just couldn't resist. It squeaked to a nominal new high. The S&P, let me just check that out. The E-mini, the S&P December future contract, made a new recovery high, 216.75. Let me just double check that. So it made a high on the 31st. That was last night. No, that was on Friday, 216.75. And last night came in, 2017. So that's a new recovery high, a new all-time high at the same point. I have no choice but to call this leg A. Now, there are a couple of things that are going on. First of all, let me say hi, everyone. My service here at TFNN is to have the Tiger Technicians Hour, 11 o'clock till noon Eastern Time, every market day. I also have a newsletter called The Opening Call. I had it about now. It's over 11 years here at TFNN. And I use a technique that I developed a couple of decades ago called... It is a Chapman wave methodology, but basically what it does is tries to identify the most obvious low bar, and simply put, from that low bar, you would expect if there's a buy signal that goes to a buy mode, as there was here in the E-minis back in the week of the February the 7th of this year at 1712. Round number low, and then it went all the way to a peak T at 2014.50, and that was in July, I believe, July, the week of the 25th, pulls back, runs up again to another two peaks. That's another technique altogether, goes to an ENNF, plunges, goes down to 1813, round number low, on the, on the 15th of October, and low, 15th of October, and lo and behold, there is a spiral to the upstream. I call it a rocket ship now. For many years, I've been trying to think of, we have the term crash. Crash is just so all-encompassing. I mean, come on. What more do you need to say? Crash is deleterious to your health and your wealth. I wanted to find a word on the upside that represents almost the same thing. Well, there isn't really one word that can do that. So I came up with a rocket ship. Now, of course, the last week has proved not very, very healthy for rocket ships. It's unfortunate. But I still think that represents something that picturesquely gives exactly what we need. We need to have an image in our mind of something that takes off quicker than anything we could even imagine. It has the kind of power that takes it vertically higher, and you don't know how high it's going to go. And that's really what we're looking at here. So this is a single leg A. Now, it turns out that over the years, over hundreds, thousands, maybe over the many, many decades that I've been involved in the market, maybe it's tens of thousands of charts, there have been enough instances where either the E-minis at 8:30 in the morning, there's a bout of news, or the Fed comes out with a statement, and there's a single leg A up to the upside, that is, and it is a powerful move. Very often it's just one leg, and very often it's just 1 to 3 or 4 bars. Doesn't matter what time frame. And then I call it the single leg A up syndrome. Why? Because there are times where that leg fails, and there are clues that you can look for as to where or how or what is going to happen. But the one of the reasons why we added to our long positions, and we only have long positions in my opening call, one of the reasons we added is because, and for those of you subscribers, Remember, I always send an update before 9:30, or as close to 9:30 as I can. If I notice it a little later, or if I'm told about it, but as close to the opening bell. If not, immediately after I send out my report, as I did today. If there's any error corrections, in this case, there was it wasn't really a correction, it was a clarification, because on one of them I said I had two scenarios. One is to buy at the opening, and then half position, and then add another half on a sharp decline, because I believe it would be going to higher highs. And the other scenario was just wait for a sharp drop to a particular level and then to buy. And then I forgot to say which one we were going to do, because it was just the scenario. So I quickly updated it, and the scenario I chose was to start the position at 8:45 or 8:50, because my opening call goes out at about 8:35 every morning. That's the final chart. Charts start going out about 7. And over the weekend, I start sending my charts out on Saturday as soon as I'm done. Friday night, sometimes I'm done. So I have to wait till Saturday morning. I start sending out the charts for Monday. So by Monday, you're already clear in your mind as to what I'm looking at, why I'm looking at it, etc. Now, I'm going back to this. So this is a single leg A to the upside. Is there a chance that there could be that phenomenon that I call the single leg A failure syndrome? I don't think so, and I'll explain why. If you look at a couple of factors here, I'm not going to go into it at this particular time. It takes a little while to do that, and I usually like to leave that for my Master Trader series or my Chapman Wave webinars. But there is a stochastic that is at 96% right now. Above 80% is good. Above 90% is excellent. Staying at 90%, any book that you read will say stochastic over 80% is overbought. That is the term they use. Stochastic under 20% is oversold. That is the term that they almost always use. I haven't found it any different. I say, what are you talking about? For goodness sake, correct the record. The record is holding above 80% is very good. Holding above 90% is outstanding. Holding below 20% is not good. Holding below 10% is really bad, unless it's a V-shaped bottom or a V-shaped top. Now, we would expect an inverted V-shaped top to occur if the S&P E-minis broke and closed at any point in the next week and a half underneath 1962. That is the that moving average right there. 9-period moving average is 1975.50. But if there was that kind of shape, I'd say be careful, because if there's further declines below 1920 in this particular move, that was a false move to the upside and very negative. I don't think so. At 96.44% right now, and the S&P cash. Let me run the numbers while I'm doing this. The futures are up 1.75, but the cash is up $1 at 2019, having made a new leg B extension today, starting off the week with a higher high, starting off the month with a higher high. That means you cannot get a peak until December, until confirmed December the 31st. Oh, doesn't that sound very much like 2007 when I said, let's wait until the end of the month, because if the Dow closes underneath the doji candle that was made at peak F and then closes underneath the 9-period exponential moving average, and look what happened. This is October of 2007. The Dow goes to 14,198.10, makes a doji candle, has a gap down the next month, that is November, and December closes right underneath the 9-period exponential moving average, which gave us that sell signal. Later on, it was upgraded. Now, remember, having signals and all that doesn't mean that you always trade it 100% the way it's supposed to be. Sometimes it takes a little while to get into. And at this particular point, there isn't even a candle on the monthly. There was last month not last month, the month before. That was in October. That was in September. There was a doji candle that said, and it really looked like we were going to do that when the Dow was down under 16,000. And lo and behold, became soaring. I remember this very pattern back in June of, I'm trying to go back which year it was, 2000 and, I don't know if I want to even find it now. I'm going back. Let me just see. That was June. No, not there. Just real quickly, I just want to see this June monthly chart. No, it wasn't there. I can't remember. But there was 1 month, I was away at the beginning of June. I remember being in Newport, Rhode Island, and I was looking at the chart. I even remember that I was having internet problems from the room that we were in. I had to go down to the lobby and send out a message to my subscribers, very unusual, to say that there was a turnaround and that there was a chance that in the month, I'm almost sure it was that month of June, there could be a spiral to the upside, and that would change things and recycle the monthly chart. And that's exactly what we've got here. We've got a recycle, and that says this is leg E extending into November with a chance that it could have recycled into, wow, I can't believe this. It could have recycled into brand new leg A. I don't know. I'm going to keep it as an E right now. Let's just deal with one thing at a time. So let's go on. Dow's down 22 at 17,367. A huge leg B to the upside. Now here again, the stochastic's at 97.43. That's the equivalent of being down at 2.57 in the stochastic, which would be really negative. And say, yes, there is a really good chance that when it starts to turn up, you're going to get a powerful move to the up, a powerful bounce. And this is saying, hey, until we start to break below 87, 86, which would be a warning to say that the stochastic could go down below 80%. This is outstanding action. So the outstanding action remains. And now we can look at the weekly chart and say, we still don't know whether this weekly chart is some kind of crazy aberration that's taken us to a leg E, or it's a brand new leg A to the upside. Isn't that amazing? So let's just run the numbers before we run out of time. And the comp index is up 14 at 4,645. Let me see. Gold, the GLD is down 22 cents at 112.44. Gold is down 280 at 1168. Silver is down 0.04 at 1606. High grade copper is still in that 3 over 3. It's just at 3.05. Let me just quickly grab that. HG right there. Yep, it's in this trading band, just bouncing around up and down, but it's holding quite well. Not great, but quite well. And we've got bonds. What is the TLT? The TLT is down 92 at 180.33. So that means that bonds are down over a half a point. And the dollar is up. I'll be back. Basil Chapman, Tiger Communications Hour. Let's take some calls at 877-927-6648. Little consolidation going on right now.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details, and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, everyone. We're back, and a whole bunch of questions. You know, the Den, we have these tremendous traders and position players and folks that come to the Den from all walks of the financial world and the lay world. And it's just so interesting because the questions are unique. They're specific to what we're looking at. And one of the questions is, Basil, is your preference peak A or peak E or F in those weekly charts or even in some monthly charts? And my answer was that I go step by step. I'm the back of my mind, I have numbers. It doesn't matter though. I'm not going to blurt out that we're going to Dow 19,473. I mean, it means nothing to anybody because at some point we might get some kind of a change, and that change would say, hey, wait, what are you talking about? You just got a sell signal to sell mode. Things could change. So I don't like to just leave statements out like that without clarification. I like to go step by step. At this particular point, I'm looking for higher prices in the daily charts. That's going to impact the weekly charts. How we pull back from the daily charts is going to allow me to assess whether or not we've got brand new buy signals that are going to go to buy modes in the weekly, which says you'll go to higher peaks all the way through to at least mid to late December. I would prefer to get in position and let the positions tell us how successful they've been. One of our positions is up fabulously, 23 or I can't even remember now how many percent, 26%. And I prefer just to allow that position to grow and then say it's become a more intermediate term position. Now we can do some shorter term trading. I suspect that this is kind of the last coda for this sector at this particular time. Might be wrong, but I want to play it because this is the most exciting phase that it goes into. We'll see. So let's go to Mohammed in Glendale, California. Mohammed, how are you?
Hi, Basil. Thank you. Thanks for taking my call. How are you doing?
I'm well, thank you. And you?
I'm okay, thank you. Thank you so much. Wanted to get your thoughts on SYNA, SYNA.
So, okay, this is Synaptics Inc. and is symbol is SYNA, SYNA. It's trading at 68.91 up 48 cents. I'm just going to show folks while we're looking at this. I had done this ages ago. I don't seem to have the notation here. Basically, I'm looking at the monthly chart and I'm looking at the 200-period moving average moving up. That's the brownie beige line right there. I'm looking for the lowest low bar. That's the low bar of the October of 2012 at 22.58, and I put an up arrow. Why do I put an up arrow? Because I'm looking at historically, and it's gone higher, much higher. So I go to peak A, then I go to a higher peak, peak B. That's the lettering. Very simple technique. C, D. Remember, a peak F is the 6 highest peak. That's the one you really have to be careful of. And lo and behold, what does it do? It goes to the 6 highest peak, peak F, very powerful candle followed by a very ugly candle, an attempt to reverse. You can see this is that lowercase h pattern, plunges under the 9-period moving average. I can't put a down arrow yet, although everything about it says it should have a down arrow. Why? Because it hasn't closed decisively for 2 bars under the 9-period moving average, that black line. This is the monthly chart. And the MACD hasn't crossed negative, and the stochastic has turned down sharply, as well as the unbalanced volume, the blue line there. And I have to wait. But everything about it says pretty certain that it's going to be a peak F top at 93.27 in July. It hasn't participated at all with this market's move to the upside. Now the weekly chart, I'm not going to do the notation here. I'm just going to say my eye said that was an A, B, C, D. That looks like an E to me. 91.50. Yep, this is a peak E top right there, the week of the 4th of July. And it made that H pattern I was talking about. It's pulled back sharply. It looks to me like the MACD and stochastic are very poor still. So now you've got the monthly chart and the weekly chart, not very good. Now comes the story. And maybe, do you do any fundamental analysis on this stock, or you just look at it technically?
Just technically.
Okay, because fundamentally it tells me, even though I don't know, but it says very decisively that this is a stock that has started to undergo pressure internally, and that there was some kind of announcement. It might have been a, I don't even know what they do, Synaptics Inc. You never know with these things because it could turn out to be, Synaptics looks like it could be biotech, but the reality is that it could be electro something or other. So I'm going to put SYNA question mark, and let's see what it is. Synaptics Incorporated. All right, I'll be back. Can you hold on?
Sure, absolutely.
Okay, we're back with Mohammed and John straight after this break. Dow's down 33, S&P's unch, and we'll be back and we'll talk about Synaptics.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. So evidently there was an earnings surprise in September. So that was way back September. That's interesting. So the earnings surprise and the gap's up. But the earnings surprise was to the downside, minus 18% or something like that. So I'm not sure. The way it's gapping around here tells me that I've got to be a little careful in doing any recommendation. This is what I'm going to suggest. Let the market, which needs to digest a little bit here, it's trying today to rally, but it keeps coming back down. But the S&P is holding very well. And Sinus up 21 cents. At 68.66. That's actually very good action. There's a way that I would recommend you, and I would treat it only as a trade, and all I'd be expecting if I was going to go long is that it pulls back a little bit to 68.22, maybe 68.10. It mustn't go lower than that. And then it starts the next leg up, which would be leg C, and it tries to fill the gap. My preference actually is to say to you, I don't like the stock right now. I'd probably say I'd be prepared to miss some gain of about a point or two, but I want to see how it can build a base here. But sometimes they don't wait for you to build the base when they've got the gap. You look at the stock and it looks horrible with the gap. Next thing you know, not only has it filled the gap, it's gone above it. In this case, it would go above 76.24. So do your homework, but all I can say to you is that if you're prepared to put in a fairly tight stop of $1, I wouldn't have a stop greater than $1. It shouldn't pull back even 60 cents before it goes to the next leg up. And the 200-period moving average of 69.79, that looks like a magnet to me. So I'm going to suggest if this is a stock that you've been waiting to buy and now it's coming in close to some kind of an area that you like, then I would start a small position at 68.62, knowing that it could pull back. It mustn't pull back more than $1, and then it has to go above today's high, and it has to really clear 68. It needs to hit 70 and start trading in the 70s. That, to me, would be very nice action, but it'll still be a starting position because that weekly chart needs a lot of work. I think 71.24, the 9-period moving average, is going to be very strong resistance. So we're only talking about 1.5 to 2 points on the upside, and that becomes the real test of strength. That's why I would only start a small position. I'd still have only a 1-point stop. That's nothing. It's like 1 point is 1.3% or something on a small position. I don't think that's a big deal. But it needs to be moving by Thursday. It needs to be above 69.90, trading above that into the 70 area. If it does that, then I wouldn't start a second position. I'd keep that first position, and let's talk about it in a week. If you still have it, if you are going to nibble on it, and you still have it by Thursday, I'd wait even to next week, either by Friday this week or Monday of next week. Let's talk again, because maybe it's starting to turn the corner because the weekly chart is improving. I'm not sure, but this is not a great-looking chart in terms of the 3 time frames. And the 120-minute chart, let me just grab this right now, is positive, and that's the reason why I'd say I'd base it on a shorter term, and it needs to climb to the mid-71, 71.40, somewhere around there. That'll be really good action just on a shorter-term basis. Going to have to wait for that weekly to improve. I hope that helps you.
Yes, it does. Thank you so much, Basil.
Come on, and good luck on Sina. We'll be looking at it together. So let's go to the next person. We've got John in Knoxville, Tennessee. John, how are you?
Very well, Basil. Yourself?
I'm good, thank you.
All right. I just bought when your show came on, option in Gilead. GILD.
Oh, okay, GILD. Let's go right there. Gilead.
Yeah. Okay, November 22nd, 111.
So this is for November the 20th. And don't forget, folks, this is one of the few times that you really get an extension. The 1st of November was on Saturday. So you've got 3 Fridays to go for an option. That's always the best case scenario, because normally you'd get a little bit of because as they roll over to the next month, so you'll get a little bit of a benefit to the premium, especially if it's down, as Gilead is right now, down $1.82 at 110.16. Gilead Sciences is one of the very best of the biotechs. Now, let's talk about, I just wanted to talk about the option for one moment. So that would imply that you've got the 111s. So these go strike prices at $1 a time?
Yes, sir.
And you've got the one that's in 3 weeks' time, well, 3 Fridays' time. So right. I'm looking at this, and this is, now, let me explain what I'm looking at. The MACD is good. I'm going to open this up so everybody can see the weekly chart. The daily chart. The daily chart shows a pattern that says there was tremendous resistance at the 110.5 area. It then pulled back in that slide in October, the beginning of October, down to the 91.73 level from the 110s. That's a pretty big move for the stock at the downside, 9%. And then what happens? Can't wait. It just runs to the upside, and now it's in brand new leg B. Now, one of the reasons why, let me see, is this a brand new leg? Yep, a brand new leg B. So I'm going to put an up arrow. Stochastic and MACD suggest exactly what's going on here. In this particular pattern that I call the squash in between the MACD and the slow stochastic, the torque is from the stochastic, and it takes the price of whatever you're following very quickly up to a B or a C. Then it starts to pull back, and it went to 90%. Now it's at 88%. The next thing that I'm looking at is that the MACD, the green line, the 9-period exponential moving average differential, that I call the fast-moving average, is holding well, and that has to take the momentum. So you've got the turbo that starts you off real quickly. Now you've got to have the momentum built up in that fast-moving average, and that suggests very strongly, especially the fact that it's in at peak B right now. If there's no new high today, which I don't think there could be above 116.83, I don't see it going 6 points from here to the upside. I would suggest that if I'm correct in my notation, that this is peak B, that it should go to C and D. Let's forget about the weekly chart for now. It means that the 120-minute chart, which has the look. Oh, I wish I could do this. Let me just do this quickly. So that's going to be A, B, C, A, B, C, D, A, B, C, D, instant restart, A, B, C, D, E, and then it goes to an F and a G. After a G, okay. I suspect that there could be a little bit, maybe another day of consolidation for the IBB, which is the NASDAQ Biotech Index, and another partial day for Gilead to consolidate. I think that the 108 level should be very strong support to 107. That's the 200-period moving average. Since you have 3 Fridays to go, I think that's plenty of time for it to consolidate. But today's Monday. By Wednesday afternoon into Thursday at noon, Gilead should be at least at the 113 to 114 area. Why? It needs to very quickly, in the daily chart, it needs very quickly to take this digestive moment and start to push above 116.83 for leg C. If we get that leg C, I'm going to suggest, if we don't get to speak to one another until then, if it pulls back after that, makes a peak C and then goes to leg D, the moment it crosses peak C to start leg D, do you have a number of calls, or do you have just one?
I got a number of them.
Okay. I would start peeling them off as it crosses that peak C to start leg D. Take at least 1 and 2 off, but then we'll be looking at the weekly. Give me a call at that particular point, because then we'll be looking to see how's the weekly holding, because if the weekly doesn't improve technically, I suspect that the biotechs are getting ready in this phase here in November to start a culmination, a coda formation that's going to take them down later on very sharply. But until I get the signals, I want to remain long in this sector. So I think you're right, but I'm going to give you one warning. If I'm wrong, then Gilead, one of the leaders, will break under 107 and close under 107, and that's where you got to be a little bit careful, because that weekly chart is the most important. If the daily could fail because the weekly is the bigger tide, it shouldn't. I'm just saying that's what I'd be watching. 106.60 is the 9-period moving average on the weekly chart. But I don't think it should get there at all in this move until later on after we make C and D. So I hope that helps you. I think you've got yourself a great entry point. Let's see how that works out.
It does, Basil. Thank you. I got to tell you something I've been doing is like instead of buying an ETF, I've been buying like top 1 or 2 stocks in the ETF.
Yep.
I feel that the ETFs, something gets taken out of them almost daily. And
you're absolutely correct, except when they're in the right trend, and majority of the bigger caps in that ETF move higher. That's going to really help you. But it's a nice way to get leverage, because you are playing the trend in any case. And I feel if I'm playing the trend, if I've got it correct, if I think I've got it correct, then why go for the 1-to-1, or even sometimes a 2-to-1? 3-to-1 does the same job, but you then have to be able to make your stops and buy stops much tighter. You got to watch it much closer. But if you are correct, you really gain tremendously on both sides. So yeah, and your way of doing it with the options is really nice. I'm probably, because I don't think I'm going to be able to get it correctly for this move, I might do it to the downside with option puts when I get sell signals on these. But so far, I'm looking at the upside. Hey, nice move. Congratulations.
All right. Thanks, Basil. Nice talking to you.
Nice to talk with you, John. Always good to hear from you. John Knoxville. Let's go to let's go to the chart that I want you to look at a little earlier on, and I want you to discuss it because I felt that the PA, am I correct? Yeah, the PPA, which is, I have notated, I had it notated before, Power Shares, Aerospace and Defense. No, that's not the one that I wanted. I wanted why am I forgetting it right now? It was the Pharmacy, PAA, no, is that right? Plains All-American Pipeline looks quite nice, but that's not it. Why am I suddenly forgetting the pharmaceutical, PPH? That's the healthcare. PPH is the Market Vectors Pharmaceuticals. All right, I will notate this in the next break, but first we've got Bruce in Lakeland, Florida. Bruce, how are you?
Hey, Basil, how are you?
I'm well, thank you.
I wanted to use your Chapman wave count and also a little Elliott wave what-if type stuff.
Okay,
I think
good.
earlier in the program you said you didn't want to see 1920, and I think it was below 1920. In fact, I believe you had a level at 1960.
Yes, those the 19. Well, if I'm doing the S&P, it would be 1968. Very important. And then if it broke that, well, you got to go all the way down to the little doji candle bottom. Actually, if you break that, then on the S&P, the 1948 to 1945 area would be the next really important support that I'd be looking at.
Okay, so I was looking at the 120-minute chart. I'll try to do this real quick. Do you have a C peak done, or are we in a C leg right now?
In the S&P 120-minute chart, I've got the recycle. I've got a peak from the low bar of 1820 back on the 15th of October. I've got peak ABCD. Then it hits the 200-period moving average, messes around there. I've got a down arrow at D. I've got an up arrow 3 bars later, and it goes ABCD, very quick ABCD. And if you know my rule with a very quick A to B to C to D, that is higher peaks, then invariably there's a bit of a pullback. It doesn't say sell signal, it just says a bit of a pullback. That's exactly what you got. And it's walking the 9-period moving average. It makes another A. I just want to double check that. That's 74.59. Yep, 74.29. So it goes A, B, C, D. And now we're in leg E. And it says that it's working hard to remain above the 9-period moving average. The MACD is still good, and the stochastics at 95%. My on-balance volume says that regardless of what we see with the intraday bounces today, there should still be a consolidation into Tuesday. My big concern, just on a very near-term basis, is that when the election results come out on Tuesday night, we could see, for the very first time, a sudden sharp sell-off into Wednesday, going through into Thursday mid-session. That's kind of my thinking right now. So we've kind of positioned ourselves to be able to play it that way with the chance that if wrong, and there's just a minor, the rectangle in the 120-minute chart of the, if I can get to it quickly, ESZ 14. Yep, we're still in that rectangle formation with we've gone to a leg C. So we've gone to a leg C in the 120-minute chart of E-minis. That suggests we could go to the D. So I want to come back and hear your thoughts. So we've got a break coming up. The Dow is down 21. S&P's up 221. We are favoring the S&P in my opening call. And right now we've got Bruce in Lakeland, and we'll be right back. Okay, Bruce?
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now you can get a
upset you very much if it was quick and then we sprang right back up in a strong wave 3?
If that happened, I would be a little surprised if in this particular move right now, the pullback was deeper than 1981 to 1987, somewhere around there. In fact, I don't think it's going to happen just yet. I don't think that's going to be, it'll be after the move that goes higher, which means that we'll be looking at the S&P daily in a little different way. If it's if this is Elliott Wave 1 of the daily chart, we might find that there is a high-level consolidation. This is one of the things that I find in the Chapman Wave methodology, not as opposed to, but in relation to what I'd be looking at in Elliott Wave, is that very often the consolidations don't conform. They use more time than price, so it's a zigzag, confuses folks with Elliott Wave. I look at it as an H pattern or a cup formation. So I'm looking at, this is leg B. I suspect we'll get a peak B. Maybe it'll be Wednesday. Maybe there is a sharp pullback. But right now, it looks to me that that pullback won't take us much below 1981, the 9-period exponential moving average. That's kind of what I'm thinking. And 1981 to 1968 should be a really good containment area. But you know what? I think you're correct. I believe that this is probably a leg 1 in Elliott Wave. And if that's the case, then those weekly charts will continue higher into November, December, into mid-December. But we can't. This is all speculation because we haven't even got a leg down yet. So
yeah.
I having introduced that concept, I think let's leave it there. Let's talk again in exactly a week. On Monday, if you can call me, let's look at it again. We'll have a lot more information. Okay?
All right. Thank you, sir.
If you're able to, and good concept there. So let's see what happens. Robert in Chicago, we got time to put you in quickly. What are you looking at?
Whole Foods Market to report this week.
Wow, look at that, nice daily. But the weekly is the one that really troubles me. Oh, do you have any position?
I do not. I will go long if you think it's going to go up.
Well, the way is when is the earnings report?
I think it's the 5th, and they do it after hours.
Oh wow, what a pity that it's moved so much. I would have recommended just a nibble because it has a chance to go to the 41 area, 41.50 area, but wow. Okay, I'm going to do this. I'm not going to be able to. I don't want to just jump in and say something now. I do think it has a chance to have a bounce. My biggest concern is I think they have a real problem. There's a lot of competition, so I would only do it as a trade. You know what? I can't do it. I'll do it on air tomorrow. I'll look at WFM, see if it pulls back, but it would be just a quick run to the upside. Then you've got to be careful for earnings.
Thank you,
hey,
Basil.
Robert, thanks for calling. I appreciate that. Folks, stay tuned for Larry Casavento. Check my opening call out. Perfect time for it. I'll be back tomorrow.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.